Hello, my name's Andrew Ellum, and welcome to participants and also people that will be watching the recorded session at a later date. Today's webinar, being the 8th of April 2020, is the Australian Government COVID-19 Business Stimulus Initiative. I'd like to thank DA and DA's Ian Olmsted and of course Jenny, who's helping with the admin of everything today. As Jenny mentioned, we're going to have some questions through about 13 slides in. This is to keep the process still running. You'll be able to ask those. May not be able to answer all questions. I'm not here to pretend that I know everything. Some questions may be too specific on your situation, and without other background information, it might be hard to give you an answer, or in fact, as we know, some things are still passing through legislation. So just bear that in mind when we're looking at the questions. Like everything, of course, we've got a disclaimer these days. This is not to be considered advice. We're just talking in a general nature. So I don't want you to go off and say, we saw that on the telecast, here we're going to do this. This doesn't take into account your individual situation. And when we're talking about things, it shouldn't be seen as a recommendation or a suitability for an initiative for you to take on. I'd refer you to your accountant or professional advisor around that sort of area. Today's topics, of course, we're going to run through the Australian government initiatives, then have that question time, then look at some state government initiatives. There's a fair bit of New South Wales because I'm familiar with that, but in saying that, some of the things we'll talk about are common threads through the rest of the state. They will also, we'll also then look at some other assistance that's still out for business. That's outside the corona bubble, and we're really talking about things like bushfire. Don't forget, this is a moving target. It will be subject to change and constant updates. As you may know, Cabinet's meeting today to thrash out some of the stuff on the issues like JobKeeper. So some of the things may vary slightly from today. In a dairy analogy, I suppose it's like fresh milk. Today's fresh milk, it's not long life. So this presentation may have some limitations down the track for those who are watching the replay or recorded webinar later. Righto, let's kick off. So one of the first initiatives I'd like to talk about is the instant asset write-off rule. Now, don't forget the instant asset write-off rule kicked off some years ago, and it was based on around $1,000. Slowly, progressively, that's increased, 20,000, 25,000, and this year there was currently 30,000. So from the start of July tax year through to the 13th to the 11th, nothing will have changed. If you purchase an item under 30,000, it will still be an instant write-off. If it's over 30,000, it won't be falling into this new initiative. Purchases effectively have to happen between the 12th of the 3rd of March this year and the end of the tax year being 30th of June 20. Eligible assets are less than 150,000, so 149,999 if we like, and business aggregate turnover of less than 500 million are eligible businesses. That's up from a previous limit of 500 million turnover to access this. It's a per asset basis, so that allows for multiple eligible assets to be written off. When I look at it, new and second hand, first used or first ready for use in the time frame. Now, what that means is, with manufacturing, there's a lot of you in manufacturers, so say you bought an item and you are installing it and it hasn't been used prior to that, I'd be talking to your accountant around that, because that to me is ready for use within the time frame. So it's like first use of the item. Jenny, can I get you to remove that chat box for me? The vision, sorry, to get my full screen. Thank you. So the other aspect, of course, is there's going to be a percentage of business use applies to this. So if it's a car and your personal use is 20% and 80% business, obviously the 80% is allowed to be written off under this rule. Now, from the 1st of July 2020, it drops back to $1,000. So it goes right back to about 5 years ago, where our instant write-off was limited to $1,000. And it drops also from the 500 million turnover to an aggregated turnover of less than 10 million. I'd just like to talk about aggregated turnover. Aggregated turnover we're going to see going through the process quite a bit is actually around entities that are joined together for tax purposes. So the aggregated turnover of the entities joined together for tax purposes would be the turnover that the assessment would be based on. So we've got a very small window for this one. We've basically got from mid-March through to June. You cannot purchase between related entities when I think about aggregated groups. So one of your entities cannot buy off another entity and use this facility to reduce tax. So don't forget, all bets are going to be off on the 1st of July when it drops to 1,000. I'd stay tuned there because it just does depend. The government that may be something they'll look at in the future. But as we stand today, it will drop to $1,000 from next tax year. One of the second initiatives they've got is the business backing business investment. That's accelerated depreciation. So when we look at depreciation, it's a government allowance or the tax office allowance to give you the money, the capital back you've paid for an item over its effective life. Now, this is going to be a little bit tricky. So I want to explain it like this. If we had a tractor which useful life is longer, the depreciation percentage would be less. If it was something like a quad bike on the farm that probably gets trashed in about 2 to 3 years, it might have a quicker depreciation because that asset isn't lasting longer. So normally each asset that you have in a depreciation sense would have a different rate of depreciation. Now, those businesses with turnover of under $10 million have been allowed to apply a simplified depreciation rule. Some of you may know that as a term like a pooled assets, where all assets are grouped together and there's one rate that applies to that pool. Now, usually an asset that's first acquired and goes into that pool would attract a depreciation rate of 15% of the capital item in the first year it was purchased. Then it would go into the pool at that reduced amount or residual amount and would be reduced at, say, 30%, as would the rest of the pool. Now, those using that method will have a slightly different calculation under this initiative than those who have turnover excess of 10 million and who are not using the simplification rule. Now, to work through that, we've already talked about some of the things about new assets and second-hand in the last initiative, the 100% write-off, but in this one, it doesn't apply to second-hand assets. It has a 15-month window, so it goes through to next year. That doesn't mean you're able to double dip and get a 50% reduction this year and a 50% reduction next year. The reduction will only happen, or the accelerated depreciation will only happen in the year of purchase. Businesses with an aggregate turnover less than 500 million apply. When we come to the deduction, it's a 50% deduction. Now, I'm going to use a simple $100,000 example. So if I purchase an item that's a depreciable asset, the first thing under this initiative will be that I'll be able to use the 50% deductibility. So I've bought something for 100,000, I've taken 50%, so my deduction of the asset goes to $50,000 allocation to my depreciation. Then on top of that, depending on whether you are using the simplified version or the standard version where each item has its own depreciation rates, you will get that as an additional deduction. So I want to explain that if, again, going back to the first example, I've had a $100,000 item, I've deducted the 50% off, so I'm holding 50,000 worth of deduction. The item is worth 50,000 now on my pool. It goes into the pool, and the government is still allowing you, in the pool sense, to deduct 15% because it's first entering that pool that year, and it's entitled to a 15. So there is a double dip in that sense, in a way. So where we see here that we've got 57.5% of the original price of the item is that we'd have $50,000 deduction from the first asset deduction, and then 15% of the remaining value of 50,000, which would be 7,500. So that's how we work out the deduction for the item in the first year. If you're using the simple depreciation of pool method, would be $57,500 or 57.5% in our example. Now, if you're not in the simplification depreciation pool, we still get the 50%. So we buy an item for 100,000 and we get our 50 first up. But then due to the effective life of the asset, we would then maybe get, say, on a truck, would be a 30% depreciation with a 6 2/3 year expected effective life. So we would then get, in effect, a 30% deduction on the residual 50,000 after we took off the initial 50%. So in that case, we would actually get a 65% cost write-off in the initial year. In both examples, as the item goes into the pool or into a normal depreciation schedule with varied rates, that would continue to operate no different to as it is now. A bit hard to follow, but I hope we've sort of covered that off with some of the examples. Now, I want to talk about the next initiative, which is a cash flow assistance for business. Grab a drink of water. The tax-free cash flow boost for business is between 20 and 100,000. You'll notice on the slide I've put 10 and 50,000 in brackets. Now, that's because part of it will be in the initial cash flow boost, and the residual or the full amounts will follow through in a second tranche. You don't need to apply for this. It will automatically be done when you lodge your activity statement. For eligibility, you must have held an ABN on the 12th of March and continue to be active, have an aggregated turnover of under 50 million, generally based on the year before's results, and made eligible payments. Now, eligible payments, I've got some examples there, but I want to read through what an eligible payment may be. It's salary and wages, directors' fees, eligible retirement or termination payments, compensation payments, or voluntary withholding payments to contractors. Now, that's where you have a contractor who says, I would like you to withhold 30% of my contract payment and remit that off to the tax office so that when I lodge my tax return, I don't have to find a whole heap of money to go towards my tax. I want that to go in as we go through the year. So that's called a voluntary withholding. So really it's about, one of the accesses is that you make a payment that you would have withheld some money for taxation based on those ones. If you're a new business, there's some concessional rules, and you can email me later, or if you're brand new, give us a note in the chat box for our question time, and I'll talk about what happens if you're a new business in the lead-up period and haven't got a full return done for last year. Now, credits, even if you raced in and did your activity statement today for the March quarter, the credit won't be delivered until the 28th of the 4th as a minimum. Now, there's an initial cash flow boost, as I said, between 10 and 50,000. It's equal to 100% of your withholding tax amount, with a minimum amount of 10,000. So every business that would make, say, a wage payment, even if it was to a casual that had only worked under the threshold, so they you haven't withheld tax for them, it's as long as you have made a payment that is eligible for withholding, so it could be zero, you will get a minimum $10,000. So let's look about an example of how that might work. So in the March quarter, I'm a quarterly lodger. So I lodge my BAS activity statement, and I might have one wage or a casual or a couple of wages, but I don't withhold more than $10,000 for that quarter. The activity statement will make an allowance for me to give me $10,000 on or after the 28th of April. And I will receive that as a credit in my BAS. For me as a small business to exceed that $10,000 in my June quarter, I would have had to, between the initial quarter, being the March quarter, and the June quarter, exceeded withholding amounts of the 10,000. If I can't do that, I'm done for the initial boost payment in that case. I haven't withheld more than 10,000, so I'm somewhere between 0 and 10,000. I would receive the 10,000 credit within my activity statement for March, and that would be it. Say I breach my 10,000 in the second quarter and might have withholding of 6,000, and 6,000 gets to 12,000 worth of withholding over the 2 GST quarterly periods. I would then get the amount on top of the 10, which would be the $12,000. But let's go back that I haven't reached that $10,000. The second tranche would be delivered to me automatically. It will get another 5,000 when I lodge my June BAS. So I'd receive that about the 28th of July, and I'd get another 5,000 when I lodged in my September BAS, and I'd get the remaining 5,000. So I've got 10 in the initial payment, and then 2 lots of 5, which makes up our minimum 20. If I may, so you could get to the maximum 50 if you withhold more than 25,000, up to 25 or more than 25,000 for your March BAS and your June BAS. You will match the amount of your withholding up to a maximum of 50,000. So if I withheld 60 over those 2 periods, I would only get the 50. If I withheld 45,000 over those 2 periods, I would get 45. So there'd be a top up in the second one to my maximum amount over those 2 periods. That would automatically, that amount will then automatically set, no matter what happens to my withholding in the subsequent quarters, that will hold that I will get that equal amount again spread over the lodgements for the second half. So if I got 50 in the initial, I'll get 50 down the track. If I got 14 up front, I'll get 14 down the track in the second tranche. So he asked, what if I'm a monthly remitter? Now, those who do a monthly remitting, unlike quarterly, you will have already dispatched some withholding credits to the tax office in your GST return for January and February. So in this case, they will allow a 300% roll up of your March quarter withholding. So if I had $12,000 in each month I withheld for the tax office and remitted to the tax office, the 3 monthlies would add up to $36,000, and that's what I would get in my initial payment at the 28th of April or thereafter. I would then lodge next month, and if I continued, so if I've got 12, 12 and 12, I've got $36,000 paid off the March BAS. In April, I'll have another 12,000 worth of payments. They'll give me another 12, and that would take me to 48. And then in my June quarter, I would add that I had another 12, but because I've already been given 48, they're only going to give me 2,000 to top me out at the 50,000. And then subsequent to that, so they'll top my last month up in the June, so paid July 2,000, but that's also when the second and subsequent payments start. Now, if I've earned 50,000 or the ability to get 50,000 worth of credit in that period through to from January through to June, I will get 50,000 spread out in monthly payments. So that's 12,500 from my July BAS, my August BAS, September, and so on, till I get the equivalent of the 50,000. So whatever you earn in your initial cash boost due to June will be the set in cement component that you will receive equally shared over your BAS lodgements going forward. So if I'm a quarterly lodger, I'll get 2 payments. If I'm a monthly payer, I'll get 4 payments because it's based on 25%. So if I was going to get 50,000 and I was a monthly payer, I'd in effect get 12,500 each time I lodged my BAS going forward into the next tax year, from the June one, actually. Now, don't forget, these lodgements are tax-free. Don't forget, we go back up to this point. When we say tax-free, it's a non-assessable, non-exempt income, and it does not require you to pay it back if your cash flow improves. However, if for some reason you're overpaid, they will require some excess back. No surprise there. The boost is not subject to GST, as it's not made or agreed to make a supply. You will still be able to deduct the withholding payment as a tax deduction, and there is no tax effect on the employee with respect to salary and wages, etc. So I know that one was fairly big and fairly convoluted, so I hope I've been able to explain that well, but don't forget, I'm really looking for questions around that if anyone needs some clarification. So we'll do that in a few slides' time. So the minimum amount's 20 and the maximum amount's 100 you would receive under that. Okay, let's move on to the next initiative. This one's about supporting apprentices and trainees. You can be eligible to apply for wage subsidies of 50% for apprentices or trainees for a 9-month period. So that's from the 1st of January through to the 30th of the 9th this year. The maximum reimbursement per apprentice or trainee is $21,000, and that would be delivered to you at $7,000 per quarter. To be an eligible employer for this, you must have less than 20 employees in training with the small business at the 1st of March 2020. To apply, contact the Australian Apprenticeship Support Network, who will complete an eligibility assessment regarding access to the assistance. Where a small business is not able to retain an apprentice, or the subsidy will be able to move to a new employer. Now you note that I've got that in any bracket. So when we look back up at eligibility for the employers as less than 20, that's for the business that retains. But for support for apprentices, for redeployment of displaced apprentices and trainees, it can be a business of any size. So if you want to take on them and have a wage subsidy and you're employing more than 20, we're going to get more than a 50% basis, and that's for anyone who's displaced. The Australian Apprentice Network and those groups will actually run a register for displaced people that you may be able to pick up through that. So the subsidy and the assessment will be completed by the AASN. Okay, let's move on to the next initiative. Right. SME guarantee scheme. So this is to keep credit flowing. The government will provide a guarantee of 50% of the debt to an SME lender. So that's a small enterprise, medium enterprise lender with unsecured loans for working capital. You must have a turnover of less than 50 million. Total size of the loan would be 250. So if they're guaranteeing 50% of it, they would be guaranteeing 125, or half of what amount you actually borrow. The term is 3 years. There's initial 6-month repayment holiday, and there's no need to provide assets as security. It will be subject to lender credit assessment, no surprise there. And interest, of course, will still be charged. It's just a repayment holiday. Now, that's quite a quick term for 250. Yep, I agree with that, being an ex-banker. But it may well be about getting yourself up and running and look for something more suitable as time goes on. The banks have been exempted from some requirements under APRA, which are responsible lending obligations for existing small business customers for 6 months for quicker access. So if you're an existing client of the bank, they don't have to have stricter obligations to allow you to get into credit quicker. There are some exemptions around that. How that will fully work will yet to be seen. We're looking at a timetable there of that being sort of in place. I think it was from the start of April rather. And the banks have access to loans of 90 billion at a fixed interest rate of 0.25%, and the Reserve Bank pushing the cash rate down to 0.25, also to make that flow of credit easier. So that 90 billion is accessible by the bank to put funds into this SME unsecured lending, or government 50% secured lending. Okay. Now, I won't drill down fully into the aspects of this, but they're temporary relief from financial distressed businesses. There's been a temporary increase in which creditors can file demand on a company and the time the company has to respond. So because of the nature, a lot of businesses may be trading insolvent at the moment. So there's also a change in threshold for bankruptcy and the time to respond. So when we put a credit note through to someone, statutory demand, someone has a certain time to respond to that, or they would be considered that the demand would be proven and the process would happen. So both cases, the amount in which you can lift, which is creditor petitions now gone from 2,000 to 20,000. So if you're trying to chase up bad debts, or someone's trying to chase you because of cash flow issues, and really the response time's gone from 21 days to 6 months. Bankruptcy's gone from 5,000 to 20,000 as a minimum, and 6 months response also applies to that. Now, when we look at temporary relief from directors, we know that as directors we have a responsibility to not trade insolvent, we have some relief around that for the next 6 months as they realise they don't want to directors make some quick decisions based on their responsibility, so they've relieved directors around that. And they've provided some temporary flexibility, targeting relief companies, etc., etc. As I said, I won't go in too much detail to that. It won't necessarily apply to everyone, but there are some changes there when you're following up or someone's chasing you up, or as a director, are the keys there. Okay, move on to the next one, the job keeper. Whoever thought of job keeper and job seeker? It sounds really good, but I tell you what, when you're writing them out on emails, you tend to get the S and the K mixed up a fair bit. So, 1,500 per fortnight per employee for up to 6 months. So net after tax, that's about $1,347 your employee would get. To be eligible, turnover less than $1 billion and your turnover fallen by more than 30%. If your turnover is greater than $1 billion, you have to have a 50% turnover drop. The turnover calculation is based on your reporting period. So again, activity statement, quarterly or monthly, compared to the early year. So April would be compared to April, and June quarter would be compared to June quarter, for example. Now, one of the other eligibility requirements it does say there is about not subject to a major bank levy. That's the big four, so let's not worry too much about that. The employee should really elect an employer. They can only get it from one employer. The suggestions are it's the one that they hold the tax-free threshold, so they maximise their return and tax isn't taken away from it. So we want to have a situation where they go to their main employer to have that done, and not have, they are not available for job seeker. They need to update their records at Centrelink if they've applied for job seeker. They need to tell them that they're now on job keeper and they wouldn't be eligible for that. If you have an eligible employee and you're claiming job keeper, you need to, by law, notify them and, of course, pay them. It's open to Australian citizens or holders of permanent visas or special category visas, subsection 4444 visa holders. Mainly that relates, those classes of visa relate to our friends from over the ditch. So they're basically New Zealand citizens that have some rights to do. You must elect as an employer to go into this program, so you'll need to lodge that with the ATO on their website, and support information showing your turnover drop and also the number of eligible employees on a monthly basis. Payments will be made monthly in arrears, and it starts as at the 30th of June, with the initial payment would be payable in the first week of May. So let's look at the amount. How much do I have to pay my employee? So the way it works is I'll get $1,500 from the tax office per fortnight per employee before tax. You'll need to take the tax out of there. So if someone receives less than that amount, so if they're under $1,500 a fortnight, we need to pay them the $1,500. Now, superannuation, I want to mention that at the moment. It's up to the employer, and I want to get this right. If we normally pay the person, say, $1,200 per fortnight, we would need to pay the superannuation on the $1,200. Because there's a minimum amount that they must receive, being the $1,500 less their tax, it is up to the employer whether they top the superannuation up from the $1,200 to the $1,500. Okay, next thing, if an employee obviously is employed on the 1st of the 3rd, the eligible kick-off date, they can be full-time, part-time or casuals with a minimum 12 months service. This may change, as you know, it's going to Cabinet today, so there might be some minor adjustments around this. So if I had an employee that I've stood down, as opposed to terminated, you would pay them the $1,500 before tax if they were registered under that, if you're registered under this scheme and qualify. If it's someone that normal wages would be higher than 15, in effect, the 1,500 is a subsidy from the government to help you with the cost base of that program. So it's not going to pay the total wage. Employees that are stood down would still accrue leave entitlements as they go. But if they were not working and they were stood down, there's still a bit of conjecture. They don't think, because they haven't done any regular hours, that superannuation would be required. But again, check to your accountants and advisors, as this will be going through Parliament in some fashion tonight. So we've got those that are on less than 1,500 get 1,500. Those that are stood down get 1,500. Those that get more than that a fortnight with regular workplace arrangements, they would get topped up to the amount. It does talk about prevailing workplace arrangements. So again, speak to your industrial relations specialist if you've got someone on above award, whether that may be something you can adjust back to the award for the time being as a cost savings. But again, that will depend on the award and the workplace agreement that you've got in place. So if an employee was stood down since the 1st of the 3rd and subsequently is re-engaged with the same employer, they could receive a minimum of the 1,500 per fortnight. Okay, right, I know that one's on, hopefully there's some questions there, but as I said, we may not be able to answer those fully, as some of the things are going to be done today, but that's a brief outline on it. Super guarantee amnesty, this is an ATO one. When we look at paying our super, so there's a cash flow assistance measure, I suppose. When we're normally required to pay our super guarantee levy, there is an amnesty till the 7th of September, where your payment will need to be paid to gain full tax deductibility for it. There are flexible payment terms and amounts that can change with your circumstance change. You have an ability to extend the payment beyond the 7th of the 9th. However, only payments made before that date will be deductible. Right, yep, no administration components. You need to elect to do this with the ATO, so you contact them. Part of the benefit of making a payment arrangement will be there'll be no administration component at $20 per employee per quarter, and you won't pay Part 7 penalties, which in some cases is a maximum amount of 200% of the charge. This is also open, I suppose, to bushfire affected, as the ATO will help reconstruct your records to try and hit the compliance by the 7th of the 9th. They're basically saying here, you know, with bushfire type people, if you lost your tax file number, we need to reissue assessments, activity statements, and reconstruct your tax records. Prioritise your refunds will help that because of the situation. But we need to understand that audits will continue to apply for non-payers. So they want you to come forward beforehand, and those who breach the arrangements, of course, all bets are off, and breach the amnesty arrangements, and they'll cancel that and penalties and costs will be reinstated. So the option there is if you're having trouble paying that. In some cases, I think your payment plan may be able to be used as a credit against some of the cash flow boost ones. So as you do the return, some of the amounts. But again, that's not advice, it's just a thought. Okay, the ATO, again, a bit more on the bushfires, same type of things. Some of the support available there is you can speed up your GST refunds. Most people who are bushfire affected, incomes dropped and their expenses are still going out, so they should have a return coming back to them in GST, or indeed if they're doing projects, say rebuilding where they're expending that money and there's large GST components on that. By speeding up to monthly, that will help speed up the refund of your GST coming back to you. That change would have a minimum of 12 months though. It would not impact your withholding payment cycle if you choose not, but will impact things like fuel tax. Can obtain refund instead of paying down debt. This is one thing they got for the fires. Usually if you have a credit, they'll hold it against other debts. In this case, they're saying that they can give it back to you to keep you rolling instead of reducing or paying down existing debts. Suspend tax and super audits if they were currently in place on the bushfire. And of course, there's other supports, again, similar to lost tax file numbers, reissuing tax returns, activity statements, help reconstruct records, prioritise your refunds, set up a tailored plan, interest-free, penalty-free, and more time to lodge your super guarantee again. Okay. Other stimulus messages we're really not going to talk about in terms of business today. We've got, of course, the $10,000 one. The only thing I'll touch on there is those of you who have employees that may not qualify under the visa for JobKeeper rather, they may be able to access their super to support themselves while they're staying in Australia, trying to work and trying to cover some of you. Now, of course, you'll be paying super to them as they go. So instead of having a super account here, when they leave, they may want to temporarily access that if they'd like to stay, and it might be a mechanism to keep them around if you can't afford to have them on right now, but would like to access them again. Some of the other visa changes, of course, is that if people in agriculture, you may have had them work and they've hit their 6-month limit per employer, that's now been extended. So you could maybe get back a good employer that you've previously had. And those whose visas are going to expire by September can have them extended as well. There is support for coronavirus affected regions, communities and industry. That will be a wait and see. At the moment, luckily, we haven't had massive outbreaks there. The job seeker, of course, coronavirus supplement of $500 a fortnight to eligible income payments, and of course the $750 payment to eligible income recipients and concession card holders is also, and some retirement type stuff. So again, we won't talk too much about that. So, okay, now I'm going to go and open up the chat box and see what we've got here. Okay, Sheena, what about sole traders and partnerships? Good point. So sole traders and partnerships will be eligible for JobKeeper. I'm imagining that's the question based on that. So yes, if you suffer a reduction in turnover, one would expect that you'd be under the turnover limits. So yes, sole traders and partnerships who suffer an income. With partnerships, I think you've got to nominate one person to get the payment and then it's paid out to the other partner, is my understanding. Next question. And partnerships who have been contracted to our business for less than 12 months. Partnerships. So I just want to check on that one. Partnerships in their own right would have access. So when we think about someone who's been contracted to you, they are not an employee, so they wouldn't qualify for you to register as a JobKeeper employer and pay them payments. They would need to apply in their own right as a partnership, showing that they have dropped the percentage of turnover. You may, however, be able to support them in terms of what documents they have to show that they're dropping there. Can we back pay JobKeeper if we haven't started before April? Now, I think start date on that, I'll just duck back to my slides. We might just duck back there. Temporary relief JobKeeper starts the 30th of the 3rd. So essentially, I'd say no. It'll only start basically at the beginning of April. Yeah, so back to the 1st of April, yes. Sorry, the question. But anything prior to that, no. Okay, Jenny's got one. This webinar will be extended beyond 1 hour. Okay, yep, righto. I think that's a message for me to keep going. Sheena's, yes, Nilmos. If you've used the instant asset write-off when purchasing it, can you still claim accelerated depreciation? No, well, the instant asset write-off will write the asset out totally in the first year. So if we buy something for 100,000, the instant asset means we would write out off the 100,000 in the first year, and effectively that asset would have no value in the pool. So we couldn't then use the depreciation, accelerated depreciation method. Wouldn't work for the second year because it's only the year that it actually is done, purchased and first enters your business. So I think that's all on those questions. So without any more there, and given our time frame, I'm just going to move that, cancel that chat box, and I'll go on to the next slide. Okay, some of the other things, as I said, it's a bit about New South Wales. There's disaster loans, concessional. This theme goes through all states affected by bushfires, generally speaking. We'll go into state by state a bit more, your state. Loans up to 5,000 if you're directly eligible for being bushfire affected. We'll skip through these. Disaster recovery grants. Businesses have up to 50,000, replaces the previous 15,000 previously. And there's also a support grant for 10,000. So I had a friend who's burnt his wood pile. He supplies firewood. Well, he was able to claim 8,000 in the first tranche of the 50 to replace his wood, and then he also was able to claim 10,000 and met the criteria there as well. So if you're a business that's been directly affected by bushfire, there's up to 60,000 for grabs there, and a $500,000. Again, those two ones I think are quite common for Victoria and maybe even South Australia, so we'll have a little bit more. New South Wales stimulus package, that is around payroll tracks, deferment of payroll, and additional 3 months deferral of business payroll, etc. Deferral of gaming tax for clubs, etc., and so on. So given our time, I want to sort of move through these a little bit more quickly. You'll be able to refer to them as we go along or later on the slides. So Queensland, I'm going to duck into this one. I'm going to go... Go out to sort of sorry for this being a bit smaller than the right screen. So 3 million. I've got links for every state, so don't concentrate too much. Some states have these flyers. which are Queensland and Victoria, and the other states don't. So there's payroll tax, loan assistance, jobs and the like, and runs through individual packages for each state, support packages, tourism waivers, supply chain stuff, 100 million relief in electricity. So then I'll just flick over to Victoria one. They have a flyer as well. It's around, payroll tax and working for Victoria Fund and so on, land tax deferral, liquor licence waiving, fast track invoices. So a lot of the governments are doing that if you're an invoice to the government, they'll fast track your payment. And of course, relief. And this is a common theme as well, which is around tenants in government buildings. So I'll just jump out of that, close current tab, close. So I've lost that a bit, hang on. Let me go back to this, share screen, get rid of that, and back to this one. Sorry about that, great technical. So again, you'll see some of these things on our slides where you have on the bottom section more around bushfires and the like for those who have been affected by that. But I'll just say New South Wales, we've talked a little bit about. So that's on Services New South Wales webpage. We've got Queensland site there for you to go and look at. We basically had Victoria as well. Tasmania, again, given time, I was hoping to open that site, but if you follow that link, what I've tried to do with the links is not go to the basic sort of site. I've tried to copy the links in there where I think the meat in the sandwich in the assistance is. Some states, South Australia for one, seemed to be a little bit hard to play with, and I had to, jump around to sort of find that. Western Australia, there's the relief, but again, most of them flow along the idea of payroll taxes and government concessions and the like in terms of rental and so on. South Australia, they do have, it was a pretty hard one to find. They've got payroll tax, land tax, and this job accelerator grant, but again, through these links, and we've got down the bottom there, we've got the South Australian disaster type stuff. Northern Territory, I don't think we've got anyone on from NT today, but if there's someone who watches, they can have a look at that. ACT, I don't think we've got anyone on from there as well. And here's a couple of handy sites. So my go-to site's really that Treasury one. It gives you some great fact sheets. Doesn't drill down to the key items, no, but I'm going to just duck down and share another screen.
There is no rush, Andrew, just take as long as you need.
Okay, I'll go into this one. Just bear in mind. Okay, so I just want to go into Treasury site now. I'll just pop that up to a full screen. So this is my go-to, gang. I look in here. So this is New Australian Government Treasury. So it goes in and it's got households and individuals there, flow of credit. So a lot of these topics we've already talked about. But again, if I go into this one, this is where I'll see things like the main ones we've talked about. And these fact sheets I find are quite great. One of the important things is you print them off and they update quite quickly. So some of them have this updated. So they're updating even on Sunday, some of these. So that would give me fact sheets. We might just open that if we're going well for time. It's going to open. No. So this is what a fact sheet would look like. And it goes into those eligibility requirements, self-employment and so on. Charities have a different threshold, and then goes through. So I'll just back out of that one. And then it goes cash flow for business. Again, see the update dates are changing, so it is a moving target, and I imagine a lot of these will update tomorrow after tonight's meeting. Increased asset write-off and business investment, they're technically the same sheet, just two sections to it. Supporting apprenticeship. So just basically a lot of the things we've run through today, I like that page to give you a broad outline on federal government, or as they call it these days, Australian government. The other one, of course, one of my favourites is the Australian Tax Office. This is the homepage that you get into here. If you're affected by natural disasters or affected by COVID-19, or you want to look at the JobKeeper payment, changing things, boost cash payments. So what I find with this is that it gives you a bit more detail, and we'll just duck into that a little bit. It gives you a quick hit on it, and then you start following links to what you particularly want. So if I go down here a little bit, the ATO community is also something I've joined lately, and you ask some questions. Through that, you register, and a panel of people within the industry with different levels of accreditation will give you some feedback in terms of that. But, you know, support for businesses, if we went into this, for example, it then starts to broaden out into the individual. This site gives you more intricate detail. But when I go into one of these, you might have to expand into 2 or 3 to find specific points. It's a bit harder to follow than the Treasury site. That's why I like it for the broad information. But when you're trying to drill down for some details, I think that's the ATO sites are good and reliable as opposed to many other sites. When I was researching this, I think I came up with pointers for about 10,000 sites. So these are the key ones I think are a little bit better. So back to that share screen, and we'll go back to that. So that's really further questions, and I'll open the chat box up, and we might get rid of that pointer.
Andrew, if you start from Anne-Marie Monda's question at 10:49.
10:49, and I might also put on the video so we can see. Righto. Could you clarify when the 12-month JobKeeper subsidy started in 2019? Okay, so Anne-Marie, the 12-month, and a lot of people have thought this is that employees, whether they be full-time, part-time or casual, need to have been employed for 12 months. That's not the case. Full-time and part-time, if they are employed as at the 1st of March, they're in. The 12-month period comes out for casuals. So it's only a matter of a casual needs to be employed for 12 months. So if you've had them on your books as a casual, the idea of a casual is they float in and out. But effectively, if you have made, I would say, payments to them on a casual basis prior to the 1st of March 2019, yes, they would qualify as someone who's been a casual for 12 months. It doesn't need to be consecutive, as we know casuals aren't like that. So hopefully that will answer that. Sarah, could you please explain a bit more about the flow of credit? So flow of credit's really in line with the banks. So if we zip back, excuse that flicking across your screen, flow of credit. So this is really about the banks doing their credit assessment. So the government's just saying to help small business access this credit, we will guarantee 50%. So it's a government guarantee. The bank can't get better than that for half of their debt. The other half's unsecured. They want a little bit more around the flexibility of that as well, in terms of they want the loans to be available. So as part of the loan products available, I'll read this, will encourage lenders to provide facilities to the SME market that will only be drawn if needed. So you may be able to say, I don't know how my cash flow is going to go, but I want to put this in place just in case. And this means that the SME will only incur interest costs on the amount drawn. So it's not, here's 250,000, off you go. You might say, I want it if I need it, or I only need 100,000 of it now. You might only need 100,000 in total. It's the maximum loan size of 250, not the standard loan size. So this means that you'll only pay interest on the drawn portion and no interest to be charged on the remaining. But they will retain flexibility to draw down that in the future should they need. Yes, I did mention the scheme will commence early April and be available on new loans made by participating lenders. I imagine the main lenders will all be involved in this, and exemptions in terms of some lending practices or responsible lending on new credit increases, credit variances, restructures, and one of the key easy ones I think is deferment of payment. If I was under some financial stress for myself, so it's not advice to your particular situation, I would probably go to the bank if I had a loan payment and try and seek a deferral. I'll usually do that for, say, a 6-month period. I don't think they're going to be too, non-helpful in that regard. Excuse me while I take a drink. Yeah, so that's the first thing, because interest is still going to accumulate. You're getting a repayment holiday, not an interest holiday. So effectively, the payments are deferred and placed usually on the end of your loan. So there will be an impact where you will pay more interest over the term of the loan, but that may well be just how it is. So yeah, 3-year term can be, basically it's for cash flow purpose. So I hope, Sarah, I might have explained that. If you want, you can come back to me with an email and we can dig a little bit more, or ideally you'd probably talk to your lender to see whether they're a participating lender. Neil, can you touch on page tax options? My understanding is supposed to go business tax payments can be suspended temporarily, and if loss is anticipated, prepaid amounts. You can do some relodgement of forms. So when we look at, I think there's 2 issues there. So pay as you go tax option, in effect under this, you'll be getting under that cash boost, you're really going to get that back. So if your PAYG amount was going to be 15,000 for the quarter, that is the 15,000 you will get back. You'll still be able to claim that and get that back. I didn't see in any of the readings, doesn't mean it's not right, that you can defer that, but I imagine there's opportunities to approach the tax office for payment terms like there is on any of your taxes, whether that's activity statement or annual taxes. So I'd say as a general rule, people could get payment terms or deferment of payment for any tax. I think the tax department will be quite helpful in that regard. So there's a few things there. One, you'll get your PAYG amount back in the cash flow boost, and 2, you can talk to the tax department about paying off some of your payments. And there is some ability to, and I know through the fires, for example, you could rechange your assessment or relodge an assessment where you'd overestimated some things, and the ATO would allow that. So I hope that's answered that. Yep. If not, just shoot another more defined question there. Sarah, we would like to apply for some bank loan to support the daily operations from ANZ. However, they don't have the detailed procedures for the new unsecured loans, do not have any more information about it. How can we access this? Okay, so again, the government's saying that package for those credit is going to kick off on the 1st of this month, or kick off from there. Pretty standard. The government makes an announcement, then everyone runs along. May not even be legislated yet. I'm not sure about that. That might be something that's on the cabinet plate now. So government always has a tendency to make a big announcement, and then we've all got to scramble as we go along to try and get everything in place. I remember when I was a rural councillor, governor would make an announcement, people would be ringing up, but it'd be 2 to 3, 4 weeks after the government actually gazetted that the paperwork came through and the finer details of that. You would certainly qualify in terms of daily expenses, so that's the working capital. I would expect ANZ to do that. If your local branch doesn't know about it, I would probably, or your credit manager, I'd be surprised if they're not waiting still for it, but I'd probably contact the ANZ's customer relations section to ask when those might be about and what do they look like. But I think it'll be the relaxing of the APRA responsible lending rules for customers that are existing customers. So swapping banks, I'm not trying to say that couldn't be done, but certainly you may have more opportunity to do that through your initial or your current bank, as opposed to swapping banks, because by the reading of the APRA, that applies to current customers, not new customers. Is the government also guaranteeing non-SME lending? No. There's the simple answer to my understanding there, Nick. Basically, it's 50%, and it'll be a specific product. So if you've got an unsecured loan for anything else, or that doesn't meet the criteria of cash flow, no, it won't fit in this product range. I believe the banks will come out having a background in there, and they'll have a particular loan for this, and it'll be branded particularly for this, is my expectation on that. So it won't be guaranteeing every loan. It will have to be to fit the criteria for this guarantee. It will have to be for working capital.